The eastern states may be in the grip of a severe downturn, but the old rules no longer seem to apply. Normally you'd expect an unemployment spike as we saw last year, but anecdotal evidence suggests many big employers are doing everything to hang on to their workers. According to ANZ, there's been hardly any drop in job ads in the past few months. The job ads are in the black and the graph has been turned upside down so you can see just how closely it correlates with official unemployment numbers in the blue. Last year, job ads tanked as unemployment soared, but roared back to life as the quickest recovery in history gathered steam. This time, well, it's that tiny blip on the end suggesting there won't be a repeat of last year's spike in jobless numbers, which would be great news. The local market ended flat after clawing back heavy losses this morning, mostly driven by big dividend payouts from the likes of Fortescue. The Aussie dollar, meanwhile, continued to gain ground against a weakening greenback following disappointing jobs numbers in New York on Friday that had traders torn between concerns of a weakening recovery and the joy of continued stimulus. Speaking of stimulus, regional markets jumped on talk China was considering it. The weaker dollar boosted gold, now at its highest level in almost 3 months, and copper. Now, when it comes to iron ore, the biggest threat to Australia's dominance comes from the small West African nation of Guinea. It's home to the giant Simandou deposit and seen as China's great chance to sever links with Australia. But for decades, political instability and corruption have thwarted efforts to develop the project. Those hopes were dealt a further blow over the weekend when an elite military force ousted Guinea's government, leaving Beijing with little alternative. And that's finance.